Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I just basically want to do a little bit of a recap about this crazy month we've just had. It's the end of April, 30th of April, and I really want to talk about what an absolute insane month we've had for the markets. As well as that, recent developments today or recent data released today, I want to ask the question, is this indicating that maybe our worst fears might come true? But before I get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. They always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, yes, we have really had a crazy month. April has been absolutely bonkers for the market. One of the craziest months I've ever known. And bear in mind, I've been in this industry and, being a commentator, I've been a market analyst for nearly 20 years now. But this is one of the maddest things or maddest months I've ever seen. It's been a hell of a month. Now, let's start off with April the 2nd. Of course, that was Liberation Day. And in many ways, that should have been April the 1st, April Fools. Really should have done. Because Liberation Day absolutely shocked the market. Now, up to that point, and you can look at the videos previously, we were talking about Liberation Day and the implications of what it could mean. But I don't think any of us were prepared for what it actually did and what Trump and his administration actually announced, because they announced a number of reciprocal tariffs on almost all countries. All countries, including penguins. I mean, not actually penguins directly, but obviously about little island which is inhabited by penguins only. But this was the sort of madness and chaos it really inflicted, because we all remember that day he came out with this great big little board with the numbers of what all these countries were going to have, the tariffs they were going to pay based on, and it turned out the calculation was based on trade deficit, not actually the tariffs they were charging the United States. So it was absolute madness. And the implications to that, of course, was the markets went into absolute shock. And then 9th of April happened. Trump announced a 90-day delay on tariffs on most countries, excluding China. The knock-on effect, after all the shock, all the decline that the market went through, knock-on effect, that was, of course, the S&P had its best trading day in years. Just clearly, just from him saying, I am going to delay tariffs for 90 days. Then what happened? Remember, most countries, excluding China. So that then kicked off, of course, the US-China trade war. And I did a video on this. We've had conversations about this. Is this, in many ways, a new Cold War? Because, first of all, the US announces 145% tariffs on China. China then strikes back and goes, right, we see you 145%. We're going to raise ours to 125%. So it's kicking off. And then, a couple of weeks ago, Trump then goes after Powell, Jerome Powell, the head or the chair of the Federal Reserve, saying he should be lowering interest rates, criticizing his performance, saying that he's a loser, saying he reacts too late. And then, again, we've done lots of shows on this. Go back, and you can watch it back, and you can see how this madness of April has unfolded. The Trump administration, and this was on Monday, Easter Monday, drops hints that they are looking ways to potentially fire Powell. Don't forget, the Federal Reserve is an independent body. It's not governmental. It's completely independent and should be, because it has to make monetary decisions they think is right, not based on the whims of the sitting president or the current administration. They've got to do what they think is right for the economy, because these guys obviously, hopefully, know what they're doing when it comes to fiscal policy. And for obvious reasons, because of this rumor, the market once again goes into a panic. Gold hits a new all-time high, which has really been the star of the month. Hits another all-time high of around about $3,500. So panic again. And then Trump announces he has no intention, or he had no intention, of firing Powell. And then he even drops hints of lowering tariffs on China. And guess what? What happened to market? There was much rejoicing once again in the market. But here is the reality at the moment. There is still so much uncertainty. So much uncertainty, because at the same time, there's questions being asked. Are the US and China, are they actually talking about trying to organize a trade deal? US says they're talking. China, Beijing denies it. And though, again, he's also announced over the last couple of days, he might be lenient on, cars and auto parts to help certainly American manufacturers like GM, General Motors, who are really going to suffer. There is still so much uncertainty. And the reality is this, at the same time, we do still have tariffs, 145% on China. China has 125% tariffs on the US. US imported cars is still 25%, though he's dropping it, potentially. 25% on Canada, automobiles and light cargo trucks. 25% on steel and aluminium from all countries. And don't forget, there is still a 10% baseline tariff on all countries. So we might have a 90-day delay, but there is still 10% tariffs on most countries. So, and to tap it all off, let's close this month out with something else. The last day of the month. What could go wrong? Well, the US economy has contracted for the first time in 3 years. 3 years. US GDP was announced at negative or minus 0.3% versus 0.4% expected. Now, as you can see, this hasn't declined like this since, again, January 2022, or quarter one 2022, shall I say. Instead, it's been steady growth. The quarter one 25 is contracted. So the first time it's contracted in 3 years. Now, this has really been driven, by large surge in imports to avoid Trump's tariffs. So basically, a lot of companies saw the tariffs, or saw the writing on the wall, realized what was coming, and decided to jump in really quick and get all the stuff in they could, build up an inventory before they had to start paying more for it. You know, paying more for it. But again, this just goes to illustrate our worst fears is that, yeah, we've always said these tariffs, this trade war can potentially lead the US into a recession. Now, I have no doubt, the next GDP reading will be slightly higher because there might not be such a rush to buy the goods in with the tariffs kicking in. But still, it goes to show the negative impact this is currently having. Because like I said, this is marked the first quarter of negative GDP growth since the first quarter of 2022. So obviously the knock-on effect of the market is, again, the market is under pressure, and we'll look at the markets in the moment. You know, like I say, it's had S&P in particular has had one of its diabolical months in history in many ways. And again, this is negative. Something else negative before we go to the markets. US ADP employment change, the private payrolls, was announced at 62,000 versus 115,000 expected. Now, okay, a lot of people look at the ADP and see that as a forerunner potentially for the NFP. Now, the reason they're saying this is why this drop, I don't believe it, by the way, it's a forerunner for the NFP. I've never really seen them correlated. But anyway, the reason why they're saying the private payroll or the ADP employment change was lower than anticipated is they're saying there is general concern in April, general worries about going forward, leading forward, that the companies are being hesitant about employing people, creating new roles. So there is a reason for that. In fact, there's a lot of insecurity as well. Like I say, a lot of motor companies now are no longer doing forward guidance to their projection because they just don't know. There is so much uncertainty. But this whole point, so they're like negative GDP, point I wanted to make, on ADP employment coming in worse than anticipated. Is this really clearly signs to come? Because obviously the one thing which has been holding the US economy afloat or keeping the bulls in the market or keeping it optimistic is the US labor market. That's always been pretty, over the years, very resilient, very strong, very stable. So is this a sign for things to come? So of course, US non-farm payroll on Friday will come into focus. That's going to be a big thing. You know, I wasn't thinking of doing it, but I might do a watch along on this event because I might think, you know, usually, like I said, I do watch alongs a lot on key economic data. But at the moment, the market's been so transfixed with this tariff story, economic data is taking the backseat. However, I think with the current climate and with economic data coming in now showing worrying signs, I think economic data will then become important. And I think NFP might indeed be potentially a major move there. So I might do a watch along on that. But anyway, expectation for the NFP is, for now, at the moment, currently in consensus, is 133,000 new jobs created, and for US unemployment rate to come in at 4.2%. So basically remain the same as it has been. Anyway, let's have a quick look at the markets before I want to make another valid point, another point as well. Anyway. So like I say, this US GDP has caused a bit of an upset. Obviously, first time it's contracted in 3 years. And as you can see, the S&P 500 did indeed open with a gap downwards. And like I say, it's currently trading negative 1.68%. And now there tends to be sort of like a potential key support for it at 5,412, 200-day moving average, which I'm keeping an exponential moving average, which I'm keeping an eye on. Dollar index, not dollar index, sorry. The NASDAQ, again, also opened lower, again, with a gap, negative 198%. The Dow, got the Dow here, don't I? Yes, I have. Dow, of course, down 681 points, negative 1.70%. So bear in mind, they've had a really, really tough month. And you can see this here. And on the seasonal here, I'm showing you the seasonal. This is on the Dow. This is 2022, how it ended. And this is where it is so far in 2025, the Dow. Negative 5.86%. You can see all the other years, 2022, 24, 23, all have been, like I say, fairly bullish. But here is how the Dow is doing so far this year. Let's have a quick look at gold. Obviously, we're going to look at gold as my broadcast. I always talk about gold. I can't help it. Gold, of course, and it's on a 30-minute. Had a slight, bit of a rush for safe haven, only slightly. Still trading around $3,308 an ounce. Fairly bit off from the all-time high. Obviously, over the last couple of days, we've had a little bit of maybe confidence or hope, but the acidity remains. So the safe haven status for gold has sort of diminished slightly over the last couple of trading sessions. However, we can still look at on a long term. This has been, like I've said on my other broadcasts, this has been one of those craziest bull runs for gold I've seen ever. This is constantly hitting all-time highs. You can understand the level of uncertainty in the market. Like I say, it's been ranging really over the last couple of trading sessions. First key area for me is around $3,260 potentially, but really the big one, if we're ever going to see a change in direction for the yellow metal at the moment, it's going to be about $3,100 psychological potentially. Let's have a quick look at currencies while we're at it as well. Obviously, on the back of the GDP, dollar has been sort of maintaining a little bit of strength around there. Euro currently trading at 113, and the cable pretty much the same. Okay. Again, the dollar is holding firm because the dollar, don't forget, after that positive news like a week ago or so when Trump said, "No, I'm not going after Powell. Yeah, I'm going to try and cut a deal with China." We've seen a bit of dollar strength, even though the dollar's been under a lot of pressure. I want to go back and talk about some other key things before I look at them as well, because there is something else the market is greatly anticipating as well. And that is, of course, earnings. Got big earnings this week. Big earnings. Because we have the Meta due later tonight, Microsoft due later tonight, Amazon due tomorrow, Apple due tomorrow as well. Don't forget, all this is released after the closing bell. In particular, I'll be keeping a close eye on Meta, because don't forget, we had Alphabet, i.e. Google, last week, who published their earnings, which was better than expected. And that was based on increase in advertising revenue. Meta has a very similar setup. So it'll be interesting to see how Meta does. But let's have a quick look at the Mag 7 as we're talking about them now. See how they're performing with this negative GDP. Let's start off indeed with Meta, because they're going to be the ones in the spotlight tonight. Again, open lower because of that shocking GDP, or this very, bad GDP. Currently down negative 3.03%. Tesla down. It's been a terrible year for Tesla. I've been talking about Tesla for a lot over the last couple of videos, for the last couple of weeks, months, I think. That's down 5.63%. Microsoft down 1.64% today. Amazon down 3.58%. Alphabet down 2.01%. Nvidia down as well, 2.82%. So the Mag 7 again is suffering today once again. As well as that, guys, let's go back to remind you of other economic data coming. We do have Bank of Japan interest rate decision due, EU CPI, and of course, like I've already mentioned, US non-farm payroll. And like I say, I may do a watch along on that, because I think I think that could be indeed potentially a big market mover. Don't forget, these are, of course, live shows, so you can talk to me anytime you wish, or ask me questions, or share with me, more importantly, your opinions. Let me know what you think. I mean, do you agree with me in the fact that April has been such a crazy month? I mean, it has. It's been almost pure madness. I've never ever known a month quite like it. I mean, I've experienced quite a few crazy months in my time, but this one, the twists and turns, this turn, that turn. The only thing I can say this reminds me of, realistically, is Trust, when she was PM and she did the crazy tax cut proposal when she was PM for, well, less than the lifespan of a lettuce. And that sent the market, well, certainly the UK market, into absolute madness. So it's very reminiscent of that. Because again, that was man-made decision, or man-made hint. The current market conditions is also man-made as well. So it does remind me a little bit of that. Don't forget, as well as that, if you're watching me on YouTube and you like this sort of thing, by all means, subscribe if you like. Hit the notification button so you know next time we're going live. And of course, if you like this sort of content, you put up with me, you don't mind me, give me one of these. It's nice to know that you like what I do. And the same if you're watching me on X. If you like us, like it, give us a follow if you like, or give us a little heart if you can put up with me. As well as that, I'd say if you're watching the recording, because a lot of people miss the live shows, they go back and watch the recordings, which is great because I love the constant support. And you do indeed have a question, or you have a comment, or you want to share an idea, put it in the comments below the recording. I will see it, and I will reply to it next time I go live on air, which is practically every single day. Anyway, well, that was April. We had a lot of fun. And here's the thing. We've got May to come now. So let's see what May will bring. And don't forget, as well as that, we're approaching that 90 days expiry as well. So there's going to be a lot of stuff to cover next month as well. It's going to be a lot more twists and turns. This is by far from over yet. Anyway, there is no questions. Leaves me to simply say, don't forget, these little videos are for educational purposes only, and in no way whatsoever shall we be taking as financial advice. I always suggest you do your research, do your due diligence, and of course, the risks at hand before entering any trade. Till next time, every single one of you, trade safe.